Welcome back, everybody, to the Crypto Mindset channel. Today, I'm going to have something amazing for you. Not special, not regular, something amazing for you. We're going to talk about all the reasons why the path of least resistance for Bitcoin and from the crypto market is up. I'm going to repeat, okay? The path of least resistance. The path of least resistance for Bitcoin specifically. And of course, that will dribble towards the crypto market. The path of least resistance is up. I'm going to share with you all the reasons, four different reasons why I believe that has a high probability. The first one, an inverse correlation to something. The second one, a direct correlation to something else. The third one, price action king always. And the fourth one is actually the fundamental reasons why all this is actually happening right now. So stay with me until the end, not too long from now, okay, to make sure you understand everything completely to a T. But before that, help a friend, cook the like button, right? Subscribe to this channel. It's for free. You just need to click like 40%, 50% of you are not subscribed. Click it and push the bell notification, and also comment in the section below. Tell me what you think about what I'm saying now. Is it complete BS or does it actually sound smart? Let's get right into it. Okay, so I'm going to start with the inverse correlation to something, okay? And we are inversely correlated, maybe some of you know about it and some of you don't, to the DXY index, which is the dollar index basically, okay? So the United States dollar, it has an index, that is kind of comparing it towards other coins, and it's this chart here below, everything here below. Above it, it's the Bitcoin chart. And I'm going to specifically hone in from between the end of 2016 up until now. And you can see I already have all the mumbo jumbo on it because I created a tweet about it, okay? So I'm going to go over this really fast for you to understand, because this is something that happens over and over again. Now, it's inversely correlated, okay? Meaning that when one of those goes up, the other one doesn't mean directly, but in a very short time frame goes down. And inversely, when the same asset that went up first now goes up, the other one actually turns around and falls down. Again, not in the same second, not in the same minute or day. It can take a couple of days to sometimes a couple of weeks for that to happen, but it works over and over again. For example, let's take a look at January 2017. You can see that how we peaked on the DXY over here. I'm going to make this white so you can see. We peaked over here. And we were at this price level, right, which is like $1,000 for Bitcoin. And when we went down, okay, all the way down, actually Bitcoin went up. So we went down on the dollar, Bitcoin went up, okay? Also, take a look at March 2020. We peaked in the dollar and went down, and we actually bottomed on Bitcoin and went up. Now you can see in both instances it took a while until it really started propelling, but that's where the bull market kind of started. Also, in roughly, October 2023, we peaked on the dollar, and just a couple of weeks later, we bottomed on Bitcoin. And of course, as the dollar went down, Bitcoin started moving up. Okay, that's one thing. The inverse correlation works. Now, each time it works differently, but it's still showing that it happens, okay? And it makes sense because when the dollar is weak, then all the big, huge investors that held the dollar for a while for a safe haven, okay? The dollar is weakening. They want to put their money somewhere else that works and produces money. That is usually risk asset. Stocks, for example, and crypto are risk assets where these big investors want to kind of diversify in order to kind of capture more gains once that happens. So all the endowments, funds, countries, they take money out of the dollar and into risk assets. This is the first thing. And also notice that each time we went below the 96 level, then the last thrust happened, okay? It happened here, it happened here, this last thrust happened, and now it's happening here, and maybe this is going to be the last thrust up for Bitcoin and from crypto. That's what I am anticipating, okay? This is what I'm anticipating. This is number one, okay? The DXY and Bitcoin are inversely correlated. And I'm trying to talk, as clear as possible. So sorry if you don't like it. Some of you are like, hey, you should speak faster. You sound like stupid. I don't care. I'm trying to teach over here. And remember, if you like it or don't, smash the like button. Help a buddy out. I want to push this to the atmosphere. I want an algorithm to hit on this video, to send it everywhere. Help me push the like, subscribe to the channel, comment in the section below. Tell me what you think about this inverse correlation. Number two, it is correlated, not inversely, but it is correlated usually, okay, with the NASDAQ, okay? And I'm going to share now the NASDAQ chart, and I'm not going to go deep dive into it. I'm just going to say that it's correlated because I know it's correlated over and over again. It is a risk asset by itself. The NASDAQ, as you know, is the index of all technology stocks, okay? And you can see, look at this. It is very, very happy at new all-time highs. Okay, let's actually put this in a log scale. Oh, it is in a log scale, so you can see it better. Look, new all-time highs. This was the last all-time high over here. I'm going to change the color here to black so you can see it better. And now we're at new highs. And actually, in contrast to the new highs we had here, for example, over this high, okay, actually, this is coming after a big correction down, which is healthy to have a correction. It's actually kind of a mini bear market all by itself, because the last time we went below this 200-day moving average and closed below it was actually all this bear market 2022. So this was kind of a mini bear market all by itself, okay? But we are in new highs right now. Okay, I'm going to reset it. We're in new highs. You can see that we're actually gapping up today even further. And not only that, most people are bearish stocks because of tariffs of Trump, because of the war shenanigans, because, everything is kind of uncertain with the Fed. Will it cut? Will it not cut? Is inflation still sticky or not? A lot of people are still bearish, which means there are still a lot of buyers that can step in stocks and actually propel price even higher, higher, and higher. Okay, so the correlation is there. We know it. It's very well known, documented. I didn't invent it. And actually, the NASDAQ is leading the way to new highs now. Okay. So if there's a direct correlation, this means Bitcoin will follow suit. Okay. Bitcoin will follow suit. So we had the DXY inverse correlation in play. We have the NASDAQ direct correlation right now in play, leading the way actually. So what do you need to do now? Smash the like button, comment in the section below. And of course, don't forget, if you want to join us, okay, join our memberships and not just listen to me on YouTube, which you can always do. It's free. Give me a like for it's free. I'll give you something free. You give me something free. But if you want to come and join us, we always produce results for our members or for ourselves. What you need to do, just scan the QR code. You can join the Elite VIP, which is the membership for all the people that have above $100,000 and to a million. Some of our people have over $1 million in crypto, and a lot of them came to us after they lost a lot of money because they actually don't know what to do exactly, and they want our guidance. This is the top coaching tool. We take you and guide you with a portfolio how to make smart decisions to actually progress and make gains instead of losing more and more because you don't know what you're doing. Of course, look, you can scan the QR code in the upper left section, or you can actually scan it over here right now. Just scan it, go check it out. You can actually join any membership you want, but the Elite VIP is really the top tier. Go check that out and you can see what we're all about. Okay, so to continue, again, we had the inverse correlation, the DXY on play, and the direct correlation with the NASDAQ in play, actually leading the way to Bitcoin with already new all-time highs. What about the third one? I promised four, right? So the third one, price action. Price action is king. I'm going to show you the chart of Bitcoin itself, and this is Bitcoin. And what's better to start with A? We are in an uptrend. We're in a bull market with higher highs and higher lows. This is a complete and utter bull market so far. Okay, so the trend is up. The trend is with us going up. okay? So price action trend-wise is going up also, okay? And this is a weekly candle, okay? We are in a weekly standpoint. We can see that we have a pattern here, a continuation pattern. It's called a cup with handle, okay? A cup with handle is a continuation pattern coined by the great late trader William O'Neill, okay? Now, it doesn't always work, okay? But when you stack the probabilities with you, okay? When you stack the probabilities, the DXY, the NASDAQ leading the way, and the fact price action is creating a continuation pattern with, us kind of doing a kind of a basing pattern or a digestion of profits or just a sideways action above the $100,000, okay, all this leads to the fact that there is strength in the market. And if I'll just remove the mumbo jumbo and go to the daily standpoint, you will see that what I meant is we have a sideways tight price action, okay, of roughly 10%, okay, roughly a bit 11%, okay, that it's very tight price action. And if it breaks above it, okay, breaks above it, I would argue we're going to go very fast to 120 and maybe $130,000 quite fast in a matter of days to a couple of weeks only, okay, and create this last leg of the bull market that I believe is about to happen right now, okay. Now, how high will it go? 150, 200, 250? No idea. I don't have a crystal ball. I only have a bald head. Okay, remember that. I don't have a crystal ball, I have a bald head. And anyone saying differently that they know how high will it go, they're full of BS, okay? The only thing you can do is keep watching the progress of a coin, update by price action, update by information, understanding that you will need to make a decision in an uncertain environment, okay? That, by the way, from a daily standpoint, okay, this cup and handle looks very much like an inverse head and shoulder continuation. Very beautiful one also. So, hey, from a price action standpoint, okay, we will need to confirm above this one. Well, actually, let me reduce this so we can see it even better. From a breakout above the 112, 100, a breakout above it will be confirmation we're going higher, okay? Now, on the other hand, a break below, 98 is a very bad place to be, okay? Very bad place to be. So now we have three in our favor. We have the inverse correlation of the DXY working in our favor as shown by the history. Okay. Second, we have the NASDAQ direct correlation as shown, as known by many people, not only by me, and also leading the way, which is the second. Verification, giving us more probabilities this is true and is about to work. The third one, the price action on Bitcoin specifically. If we look at Bitcoin from a vacuum standpoint, it's in the bull market, high lows, high highs. It's creating a base formation, a cup and handle continuation pattern, or an inverse head and shoulders, whatever you want to call it, doesn't matter. And we're having a squeeze, a sideways action above the $100,000, very tight squeeze, single digits almost, risk. And a break above the 112 will be confirming that breakout. So three working in our favor. The fourth one is something that I don't tend to talk about as much, but the truth is it is the fundamental basic thing and reason why everything here is kind of going to be glued with a high degree of probability to work. And that is the fact, okay, that the United States of America, the leading country, the empire of 2025, and of course, in the last 9 years almost, okay, has an issue. It has a big issue of debt, okay? They need to finance the debt. They need to raise the debt ceiling. It's something they're going to need to do in a second. In order to raise the debt ceiling, they will need to bring more debt somehow, so raise more capital. I'm going to explain in a second. And also keep paying the interest on that debt. Now, how do they usually do it? The way they do it is they issue treasuries, bonds, okay, for other people to buy. Now, who are the buyers usually of those bonds and treasuries? Easy. Countries with huge, deep pockets. China, the Europe, Union, Japan, top three buyers of US treasuries and bonds. But There's an issue right now, not like in the past. There's a big, mistrust between these countries and the United States because of what happened with the tariffs. So I argue, and not only myself, but the argument is that those countries are actually net sellers and not net buyers of US Treasury right now. So the United States are in a bit of a debacle right now. How can they, bring more money to the United States without the regular route of selling treasuries to trade partners like other countries? Well, the answer is you do it in-house, internally. The first way you do it is you make the Fed buy the treasuries. How can the Fed buy the treasuries? Easy. They need to print money. Boom. Printing of money is liquidity. Liquidity is very good for risk assets. By the way, it's bad for the dollar because you're printing money, inflating it. That's why the dollar, the DXY is going down. But for risk assets, it's good because they go up inversely. Also, it brings a lot of more money to the market so people can feel richer and buy more assets to appreciate that in price. Second are the banks. The banks of the United States are the largest banks in the world, but they have what is called the SLR, which is the supplementary leverage ratio, which is a limitation of how much of a leverage ratio they can have for buying treasuries and by taking loans to buy treasuries. Okay. The third people, I'm going to discuss this a bit more in a second. The third ones are funds that I'm going to do the same. So I want to show you something very interesting about the United States, okay? Because we know the Fed can print, okay? But what about the banks? The banks couldn't do whatever they want because, they had the SLR limit. But look at this. The US is likely to reduce the supplementary leverage ratio, the SLR, for banks in the coming months, okay? And you can actually see it over here. There are a few, articles about it. What does that mean? It means that banks are going to have less limits on how much leverage they can use in order to buy treasuries. Okay. What does that mean? Boom. It means more liquidity to the market. And by the way, liquidity is the lifeline for crypto and risk assets. If you don't like that, how can you not give me a like and subscribe to this channel? Because I'm giving you pure knowledge and alpha over here. Look, this is the argument. Four arguments: inverse correlation in play with the DXY, direct correlation with the NASDAQ, price action talking by itself, and of course, the glue of everything, which the fundamentals, where the money is going to come from, where the liquidity is going to come from, and it's going to come. And if you add and compound to that the fact that probably it's going to be a decrease in rates soon by the Fed, that's even more liquidity, that's even more quantitative easing, and more and more and more and more. Boom. We're going to be positioned. We are already positioned in the membership. We smash it over and over. We smash it, okay? So what you need to do, okay, first, like, subscribe, comment. B, watch this over again if you want to learn. And C, if you want to invest in yourself and actually come and be in the correct mindset, the correct, a group of people that are like-minded and can take you further. This is the last move, probably, as you see by the DXY. This is probably the last move of the bull market, and maybe this is going to be a huge bear market afterwards. Okay, what you need and want to do is scan the QR code. Come join us at the elite level if you can, if that's for you. Remember, above $100,000, we are here to help you. A lot of you lose money consistently, don't know what you're doing, you round trip your gains all the time, over and over again, you are lost. We are here to take you hand by hand to make sure you don't make mistakes again. I know, I see you, a lot of you over there have a lot of money but don't know exactly how to operate with it. We will take your hands, and of course, if that's not you, still scan the QR code, go check our regular VIPs or any other one of the memberships that we have, and choose the one that is appropriate for you. This is the last time. The train is about to go. We believe the train is about to go for the last euphoric banana zone move of the market, and you want to be positioned correct. Not everything is going to move together, ladies and gentlemen. This is not 2021. This is not 2017. This is 2025, and you need to be professional in your coin selection. Very professional. Until next time, ladies and gentlemen, no edge, no trade. Cheers.